All right. Good morning, everybody. Hope you guys can all hear me fine. Hope you guys can all hear me fine here at this AM. Feeling good, feeling sharp, ready to go. And welcome to what should hopefully be another really strong and successful here trading week. And yeah, we can kind of get after it. Can you guys just give me a quick kind of heads up here if you can hear me? How are we doing? Everyone can hear me? Yes, no, maybe? Yeah, perfect. All right. So yeah, guys, sorry about the slightly convoluted setup here today. Doing whatchamacallit, sorry, a travel setup here, right? So just got everything packed up and a little bit of a week of transition here for me. So I do apologize. And yeah, hopefully no issues or no real pain points for us to kind of struggle with here today. Obviously, not really going to change anything from a trading perspective. Still going to be looking for the same types of opportunities, the same types of setups, the same all sorts of beautiful type of price action. So I'm optimistic, I'm excited, I'm ready to go, and I'm hopeful, right, that today is going to be a strong trading day. And yeah, we can kind of get after it, right, and build off of what has been relatively volatile, right? I think trading month or so here, April has been had some highs, it's had some lows, it's had some tough price action, it's had some easy price action. And really, what my job is here today is to continue to capitalize on this sort of short term volatility and hopefully, right, finish off the day with a nice green trade. From a like stock market perspective here today, I'm expecting it to be a little bit of a maybe more muted session. For those of you who are religious, right, we've got it's Easter Monday, right? So sometimes that can slow things down here just a little bit. And besides that, right, it's going to be a relatively busy economic calendar here this week. So I'm just bringing it up on my phone. So nothing too crazy here today, but Tuesday we've got a lot of Fed speak. Wednesday we've got a lot of Fed speak. We've got PMI. Yeah, more Fed speak there all day. Jobless claims, and then I'm sure Trump was gonna jump in here at some point and yap away for us as well. And so yeah, going to be a little bit patient, maybe a little bit cautious this morning, and just put myself in situations where it's easy to be green, right? Kind of been talking about it a little bit here over the last, we'll say, month or so. But my focus effectively, right, is I want it to be easy. If it isn't easy, I don't want to take the trade. And that's going to continue to be sort of my emphasis here. Last week was a week of ups and downs, some easy price action, some tough price action, some good, some bad, some ugly. And I'm kind of hopeful that we have a smooth trading week here today and we can take advantage of whatever momentum is available to us. From like a personal perspective here, I'm only executing here today inside my like family fund or the money that I manage there. I'm going to get too many data concurrent warnings if I try to do it otherwise. So yeah, bear with me here a little bit. It shouldn't change anything. I'm not going to change trade anything differently, but just no prop firms for me here today and generally this week. So yeah, let's kind of get after it here and kind of kick things off and yeah, set ourselves up for what should hopefully be a really strong trading week. I gotta say, I feel very like the weekend felt very long for me for a reason. Um, yeah, Friday feels like a month ago at this point. So yeah, happy to be back here trading with you all, and yeah, looking forward to having ourselves a great week here and kicking things off with an absolute bang. So first things first, right? Let's do the count on ES. We've got a green candle. I'm missing some indicators here. So we've got a green candle there, right, on decreasing volume, and then today's price action is gapping down. So, thing that we need to be thinking about here now, right, is the shape and sort of the intensity of the previous green bar, right? So, yesterday's or Thursday's candle is a green candle, but it's fully confined inside Wednesday's range. So, that is a textbook inside bar setup. So, that's what we're going to have here. Cool, right? So, ES inside bar. So that does give us flexibility to be able to trade this here in both directions, right? And I'm going to have a little bit of a neutral bias here today. Targeting a move initially up towards pre-market highs, so we'll call that 53.10, and then up towards like 53.70. That's plenty of space. Cool. And then to the downside here, we're already at effectively pre-market lows. So I'm going to be targeting right that next low directly to my left, which is then going to be that Friday, the 11th candle, right? So targeting a move down towards 52.10. So we'll call that 52.10, then 5200, right? 5190, 5180, 5170. 5150. That gives me plenty of space here to be able to take advantage of things in both directions. And yeah, we can certainly go from there if we do have the opportunity. So yeah, looking forward to what should hopefully be an interesting trading day here on ES. And yeah, let's see if we can get ourselves a level of momentum that would indicate like some sort of trending price action, right? The PA that we've seen here post that Wednesday quote unquote reversal bar has been choppy, stressful, frustrating, right? Whatever adjective you want to use to describe it. So we want to make sure, right, that today we're really focusing on controlling the quality of our decisions, protecting our mental capital more than trying to kind of stress test it, and just put ourselves in situations where it's easy to be green. All right. And Q, similar, not so similar. How we feeling? This is annoying. Right, it's an inside bar here again, so kind of same story, right? Like we got there on ES. So again, we have some flexibility here to trade things in both directions. And we're going to be looking for that ORB fake out, then breakout, right? And we're targeting a move up towards sort of pre-market highs. So we'll call that 18.4, I think is realistic as our starting point here. Again, just rounding up to whatever that nearest round number is, like pre-market highs, 18,372. 372. So I'm just going to round that up right to a little bit higher up there in the food chain, and then maybe target up towards like 18.9, maybe 19,000. I think ultimately we can maybe get there. So again, it's in play. Don't need to be hyper aggressive, but it is in play. Okay. And then bear case, right? Similar story like on ES. We're already at the pre-market lows. And we're targeting a move towards then, right? Now it's going to be that Thursday high because we're already at that Friday high. So we're looking at the 10th and we're looking at a 17.9 as our starting point and then maybe go down to like 17.4 or something like that. Cool. Makes sense. Yeah. Yeah. Makes sense. All right, perfect. So let's take a look at CL here. So what do we feel? Similar, not so similar to the story we have on the indexes? Is it a different story? Is it stronger? Is it weaker? What do we think? Yeah, so I'd actually say it's not a similar story, right, to what we have here on the indexes. It's a green candle, increase in volume, right? Larger volume than effectively most of the volume we saw there last week, right? Larger than any volume bar there last week. And so it's indication, right, of possibly trending PA, whereas the indexes, right, are telling us that it's an indication of consolidation. So CL here. 2 out of 3 to the upside with volume. So that does give me like a little bit more of a bullish bias here this morning, right? Instead of anticipating that it's going to be a full two-way tape. And then targeting like 64 up towards like 66.50. And we'll go towards 67. So that gives me plenty of space there. $3 on CL if I can get it would be epic. And yeah, let's see how things want to shape up from there. So let's fire through our leading names here quickly. Okay, what is that? Why is it? There it is. All right. So Apple, right, inside bar here. Cool. Microsoft, we're going to call this a 2 out of 3 here to the downside without volume. Okay, Tesla, inside bar. Amazon, inside bar. AMD, another inside bar. So pretty consistent story here, right across the board on most of our leading names here this AM. And then NVIDIA, similar to Microsoft, right, where it's a 2 out of 3 here to the downside without volume. And then we got Netflix. Higher high, higher low, post earnings, fine. Post earnings, sweet. I think I forgot Meta, inside bar. And then Google, which is giving me a 3 for 3 here to the downside. So in general, right, we've got a kind of day of consolidation with maybe, or like a backdrop of consolidation with a maybe like hint or tease towards like that bearish momentum, right? Because we're not really seeing, besides an earnings play, right? We're not seeing too many names that are giving us a tremendous amount of enthusiasm here, right? As like a reversal spot here back to the upside. We have to be relatively objective with how we're viewing price action here today. And we're seeing stories of consolidation as we kick off earnings week in earnest, right? So we've got earnings on Google on Thursday, right? Apple next week. Okay, so that'll be when I'm not here. Amazon next week. So we're starting to just kick off, right? Effectively that process. And so maybe that's just the markets telling us that, hey, we're going to wait, right, until these stories are clean, consistent, repeatable, whatever adjective you want to describe. But we're being sold a narrative here so far, right, that it's going to pay us to be a little bit more patient than it is to be hyper aggressive. So this very much remains a market where I want to maintain mental capital almost more than I want to do anything else here. If I do a good job there of just being disciplined, structured, following my process, listening to my rules, right, executing my strategy, I'm going to be in great shape. If I choose to ignore some of those processes or those time frames or anything along those lines, then I'm just going to put myself in a situation where I'm just going to like pull my hair out, honestly, just watching price action, not really want to move. And that becomes a scenario where it's very easy to go on tilt, right? I think the other element here is understanding that we're expecting chop until we get a proven otherwise. And as long as I don't have that proven otherwise, I want to be patient, right? I want to be deliberate. I want to not assume that price action is going to give me that mega move. So from my perspective here today, yeah, I probably anticipate it to be a little bit of a slower day. Um, yeah, from just like a number of decisions. But slow doesn't necessarily mean unprofitable, right? And it certainly doesn't mean that I can't make any money here today. Very oftentimes, those days or those scenarios or those sort of circumstances where price action is a little bit slower and things are a little bit more casual, then it's easy for me to honestly just get caught up in the backwash, right, of kind of frothiness. And so I want to avoid that. That for me is really the priority. Um, and yeah, can kind of go from there. I say this all the time, and this is going to be kind of an exaggerated variant of that here this week in general. But I never want to do things here on like a Friday that are going to cost me sleep, right, come the weekend, or they're going to like keep me up, or I'm going to have a cocktail and just like writhe in pain, or like wondering why I did something, right? And obviously, I don't feel as if I'm at that place or anything along those lines, but I've got a very long drive ahead of me next week, and I'm going to have a lot of time to think, right? And a lot of time to kind of process things and kind of just sit there and evaluate maybe where my trading is at. And so I don't want to give myself any ammo to basically create like road rage, right? Or to get mad or to get angry or to get frustrated or to get annoyed. I think all of those things are simply just going to create more stress for me than it's worth. And sitting on a problem or sitting on a mistake or sitting on an issue for weeks at a time or a week at a time is certainly far from ideal. So prep, we hammered it out very quickly. There wasn't anything too crazy for us to talk about here today, but I want to be patient, right? I want to be focused. I want to be deliberate. And if I control those variables, I'm going to be in great shape. If I choose to skip those steps, right, then I'm going to put myself in a bad situation. So the deal, or I guess like the framing that I want to focus on here today, right, is asking ourselves, are you here because you want to play the game, or are you here because you want to win? And how you play when you want to win is a lot different than how you trade effectively when you just want to play the game. So I'm not here to just to play games. I'm not really here to waste time. I'm here to make money. I'm here to make good decisions, and I'm here to compound kind of positive trading habits. So that's really what my emphasis and focus is going to be on here today in general. The more accountable I am to myself over those sort of decisions, the better things go and the more profitable I am and the easier it is for me to consistently kind of make some cash. So that's sort of the commitment, right? I'm making to everyone here. I'm not here to be entertaining. I'm not here to make you feel smart. I'm not here to make you feel dumb. I'm here to play and to win the game. I'm not interested in anything else. Everything else is a distraction. Everything else is, yeah, not really what my objective is. And so I hope we're all on the same page here and we're all excited and ready to go for what should be, yeah, a relatively interesting trading day. I have a couple things, right, that I need to add to my chart here. So just bear with me for a second. Okay. All right, let's change up some of these settings. Yeah, everyone have a nice weekend though. Everyone feeling good. Okay, awesome. Good to hear. Okay. All right. So that should look a little bit more familiar here to everyone. And yeah, guys, I'm excited to be here, excited to trade with you all. And yeah, let's have ourselves a fantastic day. Let's put ourselves here in a great situation and let's just stack them up, right? Hey, congratulations, Kenneth, on passing your eval. That's fantastic. Well done, sir. Jeff, you just love to rub it in here every day. You're playing golf. I'm just a little bit jealous. And yeah, team. So, any questions here about what we're doing or what I'm looking at? It all kind of makes sense. We feeling good, feeling sharp. Yes, no, maybe. Yeah, I want to understand the plan here this morning. Well, I'm going to take that as a yes. And yeah, kind of ready to get after it here, team. So I'm looking forward to it. Not expecting a tremendous amount of volatility relative to previous day, right? VIX hanging out at 27.35 with a slightly delayed quote, but that's fine. So yeah, not a huge. Well, it's the first time we've been under 30 in like 3 weeks, right? So, a little bit less daily implied range, a little bit less daily implied volatility, and maybe that just slows down the market here just a little bit. Could be the same thing like a few of you guys have already described here in sort of the YouTube chat. Like the market might be just a little bit hungover on Cadbury, right? Had a few too many mini eggs and isn't ready to maybe rip and rock and roll here yet super aggressively. But we're going to just trade the price action right in front of us. And hopefully, right, that gives us an opportunity to take advantage of whatever volatility is out there. And then from there, we can kind of figure things out and go from there. Um, so, yeah, chart layout should look the same like always. The only difference here, guys, is I'm on AirPods, not on my traditional microphone. So you're probably not going to hear my execution sounds because my AirPods aren't going to pick up that noise that's hanging out above my other laptop. So I'll do a little bit better here. Um, I'll try to be very vocal in my execution timing and things along those lines, so everyone is aware of what we're doing and can go from there. I'm not expecting the Pope news to have any impact here on markets in general. The bigger impact, right, might just be that a lot of people turn this Monday right into a effectively long weekend holiday. Even some people will have today still off. So that would probably be a bigger indication of things slowing down here, more so than any sort of event in the Vatican. But yeah, definitely worth considering. I think maybe the bigger narrative, right, is that the last person that the Pope seems to have met with was J.D. Vance. Um, so maybe that's a funny little tie-in. But the volume drop here today, Digital Sniper, won't be associated with that. It's more that Easter Monday is oftentimes a holiday for a lot of people. They'll turn a 3-day weekend right into a 4-day weekend, and so I think that would have been determined beforehand. Um, Yeah, I wouldn't expect vol to be severely impacted by the Pope by any means. All right, team. Any questions here? We're good. All right, we'll take that as a yes. So, just going to go make myself a quick cup of coffee here, spend just a very brief moment visualizing a successful trading day, excuse me, and then jump on back in 2 minutes, and then we'll get after it. So, just give me a minute here, team. Be back in a second, and we'll chat then. Okay. In my society, what a good duck you are, huh? What a good duck. Wish me luck today, buddy. All right, team. So let's get after it here, right? That's market open. And yeah, let's see how the day wants to shape up here, right? What kind of enthusiasm kind of creeps up. I'm going to go expanded chart view here today. So you're not going to see my watch list hanging out on the side. If you want to get that, right, just go into the FAQ section. But we're just looking at NQ, CL, and ES here this morning, and really just looking right for that indication of a breakout, right, or a change of momentum. If we look at price action here in general over the last, we'll call it week or so, it's been stuck, right? It's been sticky. It has not been a particularly nice market to trade. So I want to not force anything, right, if it isn't there. And I'm trying to and this is going to sound maybe a bit bullshit, but I'm trying to remove some of the pressure I put on myself to make decisions daily. There are probably opportunities here in the last month where I've taken trades on days where it wasn't like my best decision to do so. And um, I get more than enough action, right? And on the days I get paid plenty. So I don't need to try to force a decision here or force, yeah, just force a trade just for the sake of being kind of like entertaining. I'm not sure if that's going to be a particularly profitable long-term outcome for me. So I'm trying to like focus on that here a little bit. Obviously, I know that everyone here is watching because they want to take trades, right? And they want to make money and they want to do all those sorts of things. But sometimes the market conditions that get kind of shared to us, or the way that price action behaves, or the way that things move, doesn't actually create a good environment to be hyper aggressive in. Some of the traders that I deeply respect, the old school kind of pit traders, some of the ones that have been trading for 40, 50 plus years, who kind of given their life to playing this game. They always talk about that, and it's one of those things that is easy to say but harder to do. And I think to a certain extent, I've kind of deviated away from that being a little bit of my one of my strengths. So that is to a certain extent like a little bit of a background focus here for me. I'm hopeful that I don't have to apply that as like an element of strain here today, but we can kind of cross that bridge when we get to it. But just in general, I'm trying to stay very present, right, very in the moment, and just try to be objective with how I'm evaluating price action. If I lose my ability to be objective, then I lose my ability to remain mentally calm, clear, and collected, however you want to describe it. And so I want to avoid giving the market that type of power over me. Long term, that doesn't tend to make me any money. Certainly doesn't make me a better trader. And it's honestly it's honestly embarrassing to have days where I kind of get tilted and get annoyed and frustrated with PA. So I don't want to deal with that. I want to be proactive, not reactive here today. And I'm hopeful that the market will give me opportunities if things set up. If things just chop about and hang out, no worries. I get paid for my decisions, not my time. So if I don't have an opportunity to place a trade here today, I'm certainly not going to hold it against myself that I didn't. The market will always give me another opportunity. It's like taking the bus, right? There's always another bus coming. So I don't need to jump in and force or rush anything. If I'm looking at price action already, like from an early perspective, ranges are significantly smaller, right, than what we've seen in the last, say, week or so, right? NQ giving me about half of what we got on on Friday, on Thursday, and and ES is about 30%, maybe 40% less. CL a little bit more expansive, right, which makes sense with a stronger indication there of trending PA. So if this wants to give us like that ORB reversal type scenario, yeah, we could be in really, really good shape here. And hopefully, right, we get a strong indication of good momentum. So again, right, not going to be hyper aggressive, not going to force anything, not going to overtrade. And then we can kind of go from there. No, there's no specific days, Hayden, where I will refuse to trade in general. There are only like the only days I won't trade is if it's a market holiday. Otherwise, I'm looking for price action that gives me an opportunity, right? So hopefully, right, we can kind of find a good consistent thesis here or a good consistent narrative, but not going to rush anything, not going to force anything. Yeah, there's a good chance you guys might have heard me asking Ricky to wish me luck here, that he was a good boy. Thought I had my mic muted, but if not, just add it to the long list of embarrassing moments that I've shared with you all here inside the stream. So no worries. I love my dog like crazy, and he's the best boy. So I got no problems with that. Okay, so still decreasing volume, right, as we're separating away from some of those lows. You guys just saw that reversal narrative there on CL, so we can hide this for a second and bring this up. That doesn't seem correct, truth be told. Seems like it fired off a false alert there. Right, because it should happen only on a green candle. Did not happen on a green candle. So again, a few little kinks to figure out there with that, but we'll get there in the end. Any questions? We're good. Yeah, everyone happy.
Can you
Can you
guys
guys
hear
hear
me?
me?
I
I
might
might
just
just
go
go
my
my
MacBook
MacBook
microphone.
microphone.
Can you
Can you
guys
guys
hear
hear
me?
me?
Yeah, yes, no, hopefully. Can you still hear me? Yeah. The visibility I'm getting from my OBS is poor. So bad candle shape there, right, on NQ. So not interested, right? Same thing on ES.
All right, I'm back to the AirPods. We'll figure this out. Okay, so CL gave me a possible mean reversion look here. That seems maybe a little bit fugazi. Okay, so at least that's there. That's real reasonable. So you're looking at a 90-cent move. Cool, that's fine. And then just to map it out, right, it would be like this. Probably go stop low of day, right, instead of low of our setup candle. I'm going to be patient on this here, right? I'm not super convinced by the volume profile of that green bar. Probably would have liked to have seen an increasing volume standard, right, versus anything else. And so stop loss would be 62.23. One sec here. Hey, Doge. Just a classic away day setup here. Okay. I'm just going to test something here quickly. All right, cool. All right, no issues. Yeah, I'm going to be a bit patient here on CL, right? I'm not fully convinced by that volume to play this as a mean reversion look. So I'm going to wait this thing out. And yeah, let's see if the day wants to shape up here and give us just an ounce of enthusiasm. I'm not asking for much. Is it still echoing? Shouldn't be doing it now. So the gap is because I don't reflect pre-market data inside my charting. So you would see, like if you changed your session to be electronic trading hours, then the gap disappears. But I rely on the regular trading hours, so that's why you see that gap. Okay, well, I've got every scenario I can here at the moment on how to fix this. So I don't really have an alternative to this here team, unfortunately. But I've gone now, noise cancellation. My OBS settings seem to be working fine. All right, well, yeah, there's only so much I can do from a technical perspective. Like I said, this week is a little bit of a compromised week, right? Just because I've got all right, we'll see if that works. I mean, if that makes a difference, cool. But yeah, we'll figure this out. So bear with me here. Okay, yeah, good decision to have not taken this CL trade. Was not convinced by that volume. It wasn't perfect. This mic should be connected to anything else, but who knows? Maybe I mean, that's muted. No, it's not added twice in my OBS. It's only got the one mic. Should only be just the one mic. Who knows? All right. Well, let's just focus on the on trading here for now. All right, sweet. Literally just disconnected it, connected it. Classic. All right. Yeah, the old. Have you ever tried turning it on and off again? All right. So now I can remove the noise canceling. I should be able to hear myself a little bit better. Okay, so again, CL, no interest here to the downside, and Q kind of just frothing about here, tight range. ES looks okay, a little bit more space for us to deal with. We have an increasing volume profile there, right? But it's below that white line. It's less than outlier. Like I can see a sliver of black in between the red and the white. So no interest there. The other problem, right, with this trade is your target would have to be this red line, right? And so getting the risk reward ratio to justify an entry would be very challenging. You need to pull back right into above that green line. I don't think that's going to happen here yet. Oh, we'll cross that bridge when we get to it. Oh, excuse me. Yeah, it should be automatically done for you. So you don't actually have to do any specific rollover yourself, Vincent. CL1, right, is the forward contract. And so that became the June contract, right, there on Thursday. So you only have to roll if you have an open position that you want to maintain. That's not quite our scenario, but when we're trading, when we're trading CL, or we're trading ES1, NQ1, CL1, it's still forward contract. So a bar like 1 or 2 days a month, maybe a quarter, it tends to not really be anything that we need to be concerned about. Oh, feels so weird to be back in the city. I'm very much not used to how loud things are. Okay, so good volume profile here on this green candle on NQ. Probably not closing here as the right shape for us to look at that as a reversal scenario here back to the upside. So again, every bit of information that I've gotten here so far is probably slow, right? Or it's like not the information is slow, but the price action is telling me that it's a slow moving day here so far, with kind of like bouts of big volume, but the high volume red bar we've seen, right, is kind of like a mirror image of the high volume green bar. Right, it's a very similar profile. So again, I don't have many reasons here yet to be aggressive. I'm not going to be like feeling the pressure or the rush to make a decision here if one isn't perfect. That's really going to continue to be the emphasis here and my focus. So really about being deliberate here today. Yeah, I'm in Montreal here for the next 5 days. I leave, make my move on Friday, start that drive. So I'm here for a little bit. Oh, I'm sure I still get sirens daily here, Rusty, for sure. This place has been good to me. No complaints. So yeah, for now, nothing looking super interesting. Yeah, yeah. Someone torched someone's car in one of the garages. That was a good time. So I've been streaming probably 4 years now, maybe a little bit over 4 years. Because I think I started in like in April, so probably just past the 4 year mark. Excuse me. Yeah, what a decision to have avoided CL. Just seemed fugazi. Didn't seem right. So what's the time? 9:53. We do have some 10 a.m. data here this morning. It might be five, Rusty. Yeah, it could be five. What is it? Like this is the start of year five. I think I started it in I think 2021. That sounds about right. April 2021. And so what I would say probably that makes me a little bit different, right? As a streamer here, if you want to use that term, but I'd probably view myself more as a trader. But what I do here that's maybe a little bit different, right, is that I'm not trading what I feel is going to happen, right? I'm trading basically what my system tells me is going to happen. And so, as price action is moving, as it's selling off, as it's giving us, some bits of range, yeah, you for sure could have made money chasing some of these moves. You also for sure could have lost money. And what I don't want to ever be here, right, is someone who's making impulsive trading decisions or ones that are based on the expectation of being profitable. I have never taken a trade before in my entire life thinking this is going to be the trade that I want to lose money on. You don't think that way, right? You think that every trade is going to work out in your favor and it's going to be green, which is why it can be so hard to accept a losing trade here at times, right? But if the system doesn't give me an opportunity, if the system doesn't give me a look, if price action doesn't follow my rules here to the T, I have no interest in trading it. I've got no reason to think that I'm actually going to be profitable making those types of decisions. And I would venture out to say that the vast majority of people, I would say 99.99% of people who trade that way can have good periods, right, of nice form, and then they always give it all back. And your favorite online content producers, right, the ones that are constantly shilling affiliate codes and they're streaming in front of their Lamborghini or whatever it is, they're not trading a system that's repeatable. They're trading a system that's designed for you to blow evaluation accounts so that they keep getting paid and keep getting that fancy affiliate income. So we do things here a little bit differently. Our process is probably a little bit slower than maybe what you're used to, but trading isn't itself supposed to be the thing that like brings us entertainment in our lives. We're not here to trade for a thrill. We're here to make money. And we started off the day kind of talking about that, right? Are you here to play the game or are you here to win? And the difference between playing the game and just putting up shots is a lot different than playing to win. And I'm here because I want to make money, right? Because I want to be profitable and because I want to have a sustained system that can help me get there. Everything else is a distraction. Everything else is pushing me further away from my goals. And I need to have that sort of level of accountability with myself to say, yes, that actually is slowing me down. Yes, that impulsive decision to chase a breakdown is actually putting me further away from where I want to be. And so my goal here, right, isn't to be the most entertaining. It isn't to be the like the funnest room. So those are kind of like arbitrary BS metrics. What my job here, or the way that I view my responsibility as I'm streaming, is to walk you guys through my process and my stubborn ability to follow it ruthlessly. And if I'm unable to do that, yeah, I'll let you guys know, right? Nothing's following my rules, nothing's behaving within the context that I need. And I'm not going to hold it against myself when price action moves without following my rules. That's like uh, honestly, it's like such an aggressive form of self sabotage because you put yourself in a situation where it's impossible to win, right? You, like, if you're trying to be more disciplined, if you're trying to be more structured, if you're trying to be more deliberate in your trading, then being mad when price action moves without following your rules just makes it harder for you to follow your rules in the first place. So we want to be proactive, not reactive with our risk management, with our processes, with our techniques. And that obsession will put us in a much better situation to compound way more gains. So I have nothing wrong with funded accounts, right? I've got nothing wrong with them. I think that they're incredibly powerful. I think that they're great tools. But when people rely on that as a source of income, right, the affiliate income from those, they are not incentivized to make you a better trader. They are incentivized for you to lose money, right? So I'm a big believer, especially in the trading world, that if something is free, you're the product, right? Like everyone here is a trader. Everyone here is a capitalist by nature. No one does these things out of the goodness of their heart, right? They do it because there's something for them. So, the more that we can understand that, right? I think the easier it is to just look at things objectively. Yeah, maybe they do give you good signals, maybe they don't. But clearly, the way that they're trading is bagging a lot of people. So here, right, we've got a setup on NQ to the downside, targeting a move towards 17.9, right? That's going to be our starting point here, which is approximately that blue line. We're going to now box in this trade, right? So stop loss would be 801, maybe 800. Yeah, call it 800. So we need that to be a pullback here into the 77 or 75 area or better, right? That's kind of our spot. We know that our risk reward zone starts here at 77. And so my entry target on this 3-min signal, it's going to be around that 80 handle, right? See how we pull back into that zone. That was a little bit too fast, right? Remind me a lot of that second candle of the day. So let's see if they can find some support here again. But yeah, definitely starting to watch NQ here to the downside with an entry target like on a pullback approximately into that blue line. So watching carefully here, and it's just a simple high volume breakout away from the opening range, and we're targeting our secondary levels that we did our pre-market prep on. Okay, so good little reaction here so far. I'm going to see if I can get that pullback to occur. So I've got everything set up, right? It'd be a one contract play, stop loss at 800, and I'd be risking about 18 points, so like 360 bucks. And if it doesn't give me a look here, like it might not on this 3 min, no worries. Just reset it. It's going to give me increasing volume here, and I can always try again. Alternatively, ES didn't give me outlier. And again, right, I'm not here to chase. I'm trying to be deliberate. I'm being specific, right? I'm letting you guys all know what my entry price is going to be way before it ever happens. So you should be setting up your position here, right, to be able to maximize those variables. If you're waiting for me to say that I'm in a trade, you are no longer copying my system. You're now chasing my technique. And the difference between copying and chasing is thousands of dollars. So again, watching here carefully, right, as we pull back into that zone. Not the strongest of candle shapes, but still okay. Held lower lows. Okay, so now we have to go aggressive technique. Stop loss would have to be 980. It's a bit of a tougher one. I would prefer this now, I think, on the 5 minute versus the 3. So let's see how this candle closes here in the next 45 seconds or so. Again, we've not missed out on anything here yet, right? So don't feel any FOMO or greed or whatever. There's no reason to do that. What I think something that most people maybe need to be aware of, right, is that a lot of people will place a trade to remove anxiety over watching price action, right? Where they're looking at PA and they think, ooh, it's going to run. So let me get a trade because I don't want to miss out that move. And that usually is a sign of like a rushed process, right? Or a skipped step or however you want to describe it. And that's not a very sustainable way to behave as a long-term trader, right? If we're just making decisions to alleviate pressure from our psychology, right? Or we're just taking trades to alleviate that pressure, then we're probably not taking trades, right, with like a clear mind or an honest approach. So again, right? I'm not taking trades just for the sake of them. I don't care that this thing is sold off 120 points. Really makes no difference to me. What I care about is has price action moved in a way where I could have reasonably expected myself to have gotten an execution? And do I have a repeatable set of rules, structures, and processes so that I can maintain my mental capital and consistently execute my edge? The concept here, right, is called expected positive value. So if I take random impulsive trades, I don't know, right, what the expected positive value of that decision is. I don't know if that decision is actually long term profitable. I don't know if that edge is actually one that's sustainable. And I can't tell if that result was luck or skill. All those things, right, when combined, just hide from me the things I need to work on, the things that I'm good at as a trader, right? And the things that I maybe need to get rid of entirely in my game. The more repeatable, systematic, and kind of like structured your process is, then the easier it is for you to actually make money and to put yourself in good situations. So I only take trades or trade setups, right, where I have back tested the living heck out of the idea and then survived years of stress testing it so that I understand what type of variables or what types of agreements I'm making with myself. That means, right, when I take a trade and I have a 60% win rate, but I'm targeting a 1 to 3 risk reward ratio or 1 to 3.5 risk reward ratio, I have a very strong expected positive value of being green on that trade. In fact, right, that gives me like a profit factor of about like $8, right? So what that means is that for every dollar that I'm risking, I'm expecting to make $8 in return. So if I don't have that information about a setup, right, over a large sample size, over hundreds of executions, over 100 of examples, no desire to take that trade because I'm missing information. And when I'm missing information, that creates anxiety, it creates stress, it creates fear, it creates greed. It helps me reward my most impulsive and least profitable trading habits. And it's just never profitable. Maybe on a short-term day-to-day basis, like you guys saw on Wednesday, right? You can get lucky for sure, right? You can flip a coin and get paid out, but lucky doesn't scale, right? It really just doesn't. So I have to be more disciplined, structured, systematic, whatever you want to call it. Those are the things that make me money. So there's no yeah, no greed here. I don't feel like I've missed out on anything, right? I would rather miss a winning trade than I would to take a losing trade. I think fundamentally that's really what it comes down to. And a losing trade isn't necessarily just a P&L thing, right? A losing trade or a winning trade is, did I behave the way that I expected, right? Because if I've expected positive value or positive EV, right, on my trading decisions, then each trade I'm expecting to win. But if I don't have that information, then I'm effectively becoming a gambler, right? And I'm tossing all logic, reason, and probability out the window. And yes, yeah, the market can pay you out for those scenarios, but you'll never keep that money. You'll give it back in a week, almost guaranteed. So still just watching here, still just watching here. Okay, so maybe you could do this again, right, on this 10-min time frame. Effectively, we're still looking for that same area as we did previously, right? So I'd be looking for a 783 entry here on a pullback. And we could be looking for a little bit of a larger profit target here on this 10-min time frame. So let's see. We're about 20 points away. So again, watching here closely. Okay, so still watching here, right? Again, looking for a gentle pullback here into that blue line. Stop loss 801.50. And it'd be a one contract play. So everyone, right, should know what we're doing here. We're looking for a short, stop loss red line, entry blue line, right? Target yellow line. Yeah, if your prices are different, there's been no futures roll here, right, on the indexes, right? That doesn't occur until Monday, June 16th. So you just might not have live market data, which would make your prices 10 minutes behind. I would recommend working through the start here channel of the Discord and just doing literally everything there because it's impossible to trade if you have a 10-minute delay in your data. So that would be the only thing. There has been no change to the contracts on NQ and ES. So the only thing that it could be would be a market data issue. Interesting. I would need CL to hold out above the opening range high. So I'm going to wait. For now, NQ still appears to be my best or most likely entry here at the moment. So I want to put my energy into watching this and just watch how it pulls back, right? We're like potentially 13 points away here. Oh, excuse me. Okay, so still watching here, right? And I need that blue line to be my entry zone so that I can stay within my max loss number for my trade, right? Yes, that green line here, 966. Anywhere above that's an appropriate risk reward ratio where I could justify taking this trade, but I simply cannot justify my position sizing here at that entry, right? My objective is to never lose more than about 500 bucks per trade. So taking a rule, right, where I can't get the position sizing I want again, right? I've got no FOMO here. Either it pulls back into a zone where it gives me the appropriate position sizing or it doesn't. It's not personal. The market isn't thinking about me. So I'm not going to now change my behaviors if it doesn't want to follow my rules. If I don't get a trade, sweet, right? If I do get a trade, sweet. All I care about is did I follow my rules? Did I behave how I said I was going to behave? Did I execute within my structures? If I do that over a 5-day, 10-day, 100-day sample size, I'm going to be really profitable. If I don't do that, then I'm probably just going to stay stuck or I'm going to blow my accounts. Neither of those things are preferential. So if we're looking so far here, right at this 10-minute candle, every time we kind of creep up into that zone between the green line, right, and the blue line, we see relatively aggressive sellers stepping in and defending that zone. It's a relatively positive sign. Now, what we need to be aware of, though, right, is when they give us that defense, it's not like it's flushing through an extra 600 points, right? It's making a relatively small move. So it's very much like catching your breath here at the moment. We also got to be aware, right, of ES. ES hasn't really moved away from that 210 barrier. I've seen it go like 208 maybe. So it hasn't really given us a level of enthusiasm to indicate a continual or continuing trending PA. So again, right, being patient, making things binary. Either it hits my price or it doesn't. And if it doesn't, I'm not going to hold that against myself. I'm not going to sit there and torture myself thinking, oh my gosh, I can't believe I didn't make money here today. It's the dumbest thing to do. Okay, so now we're looking at the aggressive entry technique. Little bit challenging for us to get this because we need to pull back now deeper into our confirmation candle. right? We'd be looking at an entry of about 7,950, right? 17,950. Best case scenario might be for us to get a high volume breakdown through like 200, right, on ES, go 5190, right, or breakdown through 900 here on NQ, and then we can start to target that 17.8. That'll open up a lot more like flexibility effectively in that setup, so that could be pretty interesting. Good volume though, really good volume. Okay, so we're watching if ES here can close under 200, 3 seconds, or sorry, 10 seconds ago, 3 points. Doable. Didn't do it. So all I'm going to do here now, right, is pass on the burden of confirmation to the 5-minute time frame and basically reset that same kind of thesis we just talked about there, right, on the 5. So I'm looking for a break and hold here through 900, and I'm looking for a break and hold here through 200 on increasing outlier volume and a strong candle shape. We've got the volume profiles. Those are fine. So we're just trying to judge now here the quality of this next candle, and then we can start to target some of our separation levels. Again, if it doesn't give me a trade here today, guys, I don't care, right? All I'm here is to follow my rules here, be deliberate, be specific, and to effectively, right, ignore everything else. The called grim reality, right, of backtesting is that you realize that when you follow your rules, you make money. When you deviate away from them, everything else is random and unprofitable. So although we've had a lot of like closes, right? Like, ooh, almost doesn't mean I'm owed anything, right? Doesn't mean I should have been in this trade. There's none of that. That's just self-induced torture. The reality as a trader is I'm going to miss hundreds of moves over my career, right? Thousands of moves over my career, millions of moves over the course of my career. So I'm not trying to optimize for a singular daily result. I'm optimizing for a long-term result. And that's why making your rules binary and making that process more rigid actually makes you more money in the long term. It's because you don't give away your gains aggressively, right, in between your A plus setups. So you actually can compound. When you give away your ability to compound your gains, you tend to just start to compound here negatively to the downside. And again, right, that doesn't really make anyone any money. Yeah, we're still trading June, right? So if you look at the current contract, the forward contract is the June contract, and it has been for the last month, right? So this, right, we switched to the June contract here on March 18th. So yeah, literally a month ago. So it's got nothing to do with the contract roll because the roll happened so long ago. So it's not that. So again, right, we didn't hold under that 900. This held like right at 225. Ooh, it's a tough one. Again, right? Binary is break and hold under 200, a close at 225. If we're making it binary, it's what? How would we describe it? Is it a confirmation or no, right? If we're saying confirmation is a breakdown here under 200, what's a 225 close? Yeah, not confirmation exactly, right? So we set ourselves a line in the sand. I don't care that it was close. Close is not good enough. Has to be perfect. How can you call it an A plus setup, right? If every element isn't perfect. Heck? There we go. So again, right, just pass on that burden of confirmation to a longer time frame, reset, try again. And I'm not going to be the asshole who chases this price action. It's simply not worth it, right? And that doesn't suit you. Cool, leave. We don't want to work with you anyway. But if you actually are motivated to become more disciplined and ultimately more profitable, that's what it looks like, right? But if you're hoping for just like a big, massive win here, you're not looking at things in the right way. And I wouldn't even like, so Steve, you're calling it patience, right? I don't call it patience. I call it stubbornness, right? Because I'm here to follow my rules and to not deviate away from them. So if it doesn't follow my rules perfect, I'm not being patient. I'm just being stubborn and trusting my process. Right. So I think patience is such a misunderstood term in trading because everyone thinks, oh, wait for this, wait for this, wait for this, but they don't know what they're waiting for. And so they think that it's like a time based thing. It's got nothing to do with time. Right. Being patient, but you don't know what you're looking for. You're not being patient, you're being indecisive. And again, right, we've not missed out on any move here yet. So the difference between working at a fund versus working for myself, it's a liquidity difference, right? So when I'm entering a position here right now, or when I enter a trade, there's enough liquidity in the market where I can basically execute when I want, and get out when I want, when I want. You don't get that same luxury when you're trading institutionally. Like my position sizing when I would trade would be $40 million. If I just did a market order of 40 million, I'm going to create a lot of slippage for myself, right? For as a starting point, so I'm going to get a terrible, terrible fill, and I'm going to create a lot of chaos in the market that's going to get me investigated. So what a fund does, right, is they run effectively rolling positions. So there'll be days, right, or there were days where it's okay. We've got a thesis on Apple. We think in the next 3 days, Apple's going to go up 5%. Let's say, just as a hypothetical. So, okay, let's build up into our $40 million position so that we're able to take advantage of when that move occurs. And then there were a bunch of rules over like how much of market volume I could be, things along those lines. Like I was never allowed to be more than 5% of market volume at any given time. So to put that into perspective, right, if 100 shares of Apple trade in the last 5 minutes, I would only be allowed to purchase 5 of those shares. So you needed a lot of things to sync up and kind of come together. And so it was a more like it would take me a day, even sometimes 2 days, to get into some of my kind of positions. Whereas here it's a little bit different. Um, I traded every day, hundreds of times. Um, we had three strategies. So we had we called it a short-term technical strategy. We had a Pangea strategy, which was the entire world, and then we had effectively like a market making strategy. I was doing trade execution on the short-term technical strategy in U.S. markets and was responsible for NYSE and Nasdaq names, and so I had to do the execution for all of them with sort of one other guy. So no, on average, I was placing hundreds and hundreds and hundreds of trades, but it would be different. Like I would have tools, right? So we had our own kind of like built-in. Um, I'm going to call them algorithms, right? That we could use to set up parameters for executing trades. So I get an email. Okay, we want to buy Apple at this price, and I say, okay, buy Apple when it's at this price or lower, and then I could set the volume that I wanted it to execute on, right? And so then it would automatically kind of fill that out for me, and I'd be monitoring it, make sure it's behaving how I'd expect, and things along those lines. The core concepts I trade are the same, right? So philosophically, it's a very similar approach. Philosophically, I execute very similar ideas. I rely on those candlesticks and volume in the same way that I relied on them when I was trading institutionally. But the difference, right, is that my execution is just so much easier here. So I can be, I don't know, more aggressive. Maybe it's not the right term, but it's like the closest that I can get to. Where yeah, like I need a much smaller move to move the needle for me to be successful, right? And that would be really the main difference is the liquidity required that I need um, is just so different, right, than what I need as an institution or as a retail trader. So it's a million reasons why I left. Um, I'd say like three big ones. So I was in the UK when I was working there, and I was working in the UK as a European citizen. So both of my parents are Polish immigrants, so I have a Polish passport, and yeah, had the opportunity to work in England because of that. The company that I worked for was very pro Brexit, so they really didn't want to do um, like they wanted to see an independent Britain away from the EU. And for like the 18 months leading up to Brexit, it kind of just felt like I was constantly selling my soul to make these guys money when they didn't really believe in my right to be there in the first place. So it felt like a little bit hypocritical from that reason. So that would be primary element number one. The second reason is I lived in a place called Guernsey. And Guernsey's awesome because it's a tax haven, but it's terrible because it's like obscure tax haven, right? Everyone who lives there is 75, right, and older. Um, you'd go to a bar and you'd like strike out with a girl, and then you'd see her at the grocery store like the next day because there's only one grocery store. So like from just like a where I was, in my life and like my age and stuff, it was just the most boring place to live in the world. And then the third reason is I had a really good friend who I worked with there, and he ended up actually passing away on the desk. He had a rare kind of genetic heart condition, and that was kind of like my, all right, fuck it, I'm leaving type moment. It just made me realize just like how precious time is and how quickly things can change. And so I wasn't really happy anymore, and it became just an appropriate time for me to leave. So that was sort of the decision. Um, I actually didn't think I was going to trade for myself after I made that decision. My objective was to try to find another hedge fund job or a family office job and to work in either New York or Singapore or Hong Kong or somewhere. And that was honestly about to happen. I had an offer in Singapore for a family office and was about to take the job. And then 2 days before my flight, COVID pandemic hit and the offer got pulled. And they let me keep my signing bonus and all that kind of stuff. And at that point, I just decided, all right, fuck it. I've got enough money. I can figure this out. And yeah, committed to trading retail full time. Well, of course, yeah, they lose trades. Again, they look at risk reward from a different perspective because they're running a rolling portfolio, right? So they're not ever closing their entire position all at once to realize that. The way that they more manage risk is like if, let's say, like it's an interest rate a decision is coming up, right? And the fund thinks that interest rates are going to rise. They're going to do a bunch of calculations and they're going to say, okay, these names do well when there's an interest rate hike. These names do poorly when there's an interest rate hike. So let's go net short these names. Let's go net long these other names. And they'll manage their risk in that way. So from a risk reward perspective, they don't look at it the same way because they're not managing their positions the same way. They're looking at things more as like a holistic, right? Approach. They're looking at things from how does everything work together? We would have 10,000 names in our tradable universe, right? And the entire portfolio would be allocated across those 10,000 names. And as events would occur, you'd be trimming, adding, or reversing positions to maximize basically the probabilities of being successful on that. So it's a little bit of a different way than how I do it from a retail perspective. The Fibonacci tool and how I map out my risk reward ratio is simply my own invention, if you want to call it that. And um, yeah, it's like a way of me being able to figure out my probabilities or like what my stats are without having to be like a quant or anything along those lines. So it's yeah, it's a simpler approach because I don't need to be as complicated in my execution. Yeah, so I got paid a salary and then it was a bonus structure as well. We had two traders for every region. So there were two guys who traded US, two guys that traded Europe, two guys that traded Asia, and then two guys that did Forex, and two guys that were responsible for like our commodity futures, so stuff like soybeans and stuff like that. Um, and so that would be sort of the general structure. Outside of that, every trader had probably like five support staff. So I had access to obviously like back office teams that would take care of like corporate actions or like do voting and stuff like that on shares that we had voting rights. We had like everyone had like a trader's assistant, right? And so their job was to like check data and make sure connections were working and stuff like that. And then yeah, there was like a psychologist that I had access to that I had to speak to pretty often. And so that was there. And then there was a portfolio manager. So they were kind of reviewing my trades on a daily basis and things like that. And then, yeah, like Norm was saying, um, yeah, we had like, chef and you get whatever you wanted. Effectively, we had like a PA system. So I never had to worry about anything when I worked there. Like they paid for my rent, they paid for my car, they paid for all my bills. So all I had to do was show up to work and trade, right? That was it. I mean, it depends on anyone could close Peter's trades. And Peter was the fund owner. He's one of the owners of Williams racing team, one of the F1 teams. So very, very well off, rich guy. But yeah, he had a jet setting lifestyle, right? So he'd call you up regardless of what shift you were working. He'd be in Singapore one day, or London, or LA, or wherever. And so, whoever just got lucky enough to answer his phone would do it. If he had any special stuff to do, he generally sent it to the portfolio managers, who then allocated it out specifically. Though the funniest that, I mean, this is, you say funny, but the thing that was the most interesting was at each year, we had to do like basically an Excel reconciliation of the trades that Peter had forgot about. And we had to either close them, manage them, or do whatever. And that was always like an end of year task. And my last year there, I remember Peter had like a $50 million FX trade that he had totally forgotten about. And I was just like so blown away that someone could forget about 50 million. So that blew my mind. As for how I got paid, so I was doing trade execution, right? So I wasn't trading my own strategy. I was trading the fund strategy. How I got paid, or how I made money, was from a salary. I got paid a base of £35,000 a year. And then obviously, like I said, my housing, all that kind of stuff was taken care of. So I probably made my total package probably about 65K, maybe something along those lines. 65K GBP, completely tax free. So not any taxes on that, which was epic. And then my bonus payment was determined on how well I traded. And so let's say that go back to that Apple instruction, right? And it's like, okay, we want you to buy $40 million worth of Apple shares, right, at this price. If I could get, let's say, my instruction was buy Apple at 100 and buy 40 million at 100. If I bought 40 million at average price of 99, that $1 difference would go into my bonus pool, and I would get a percentage of that at the end of the year. A small percentage, but a significant one nevertheless. And yeah, that's where you made the majority of your money. So yeah, okay on NQ, but not enough volume. And so end of the year, I'd get a bonus of my biggest bonus was like £650, £650,000. Yeah, so better, your incentive is to get a better entry and a better exit. Right. So I have ways of like juicing my performance on the front and back end. And then what was the best perk was when they allowed you to put your bonus back into the fund. And that's where you really started to see like the serious effects of the compounding. So it was an epic job. Learned a tremendous amount, made a ton of money doing it, but um, yeah, it was a bit soul crushing at times. I find trading to be a lot more enjoyable working for myself, and it took me probably 3 years maybe 4 years to start making kind of what I was making when I was working institutionally. So it took me a bit of time to kind of catch back up. Now I make more than what I would now, not with taxes. With taxes in Canada, I make like 25 times less, but there's only so much you can do. So again, not outlier volume here anywhere. So let's see. And yeah, if you guys have any questions, right, obviously happy to answer them as best as I can, especially if it's a little bit of a slower trading session here so far. But yeah, working for a hedge fund was an awesome first job, first like real job. So I don't regret doing it. I miss the energy of being on a trading desk. That was probably the hardest thing to give up. But everything else, it's nice to have kind of my freedom. Like the hardest part, um, again, I'm talking about like Peter and his jet setting lifestyle. So like the way that that worked, DTR stands for day trading room. Day trading room. Um, so yeah, like I was always have to be on call, right, to answer emails, answer questions, do whatever. We literally had a rule where if Peter emailed you, you had to answer that email within 30 minutes. So if he emailed you at 3 o'clock in the morning, you had to have the notifications basically set up, right, to be able to see that email, wake yourself up, right, answer it, and then go back to bed. And you'd get those like 3 or 4 times a week. And then you'd fall back asleep, right? And he'd send you a response, and you got to wake back up and then go from there. Yeah, for me, Joey, I think probably Top Step is still um, I would still say Top Step is probably the best, at least in my opinion. It's the one I've taken the most money from, so take that with a grain of salt. Like that's why it's the best, right? I find it just the easiest to get paid out on, and it's like a reputable's like a an oxymoron maybe with these prop firms, but it's been around for a long time, and I've never seen it screw over someone. Okay, not outlier volume again. Not outlier volume again. It's kind of just a bleed here. Annoying. Yeah, Apex is fine. I got no issues with Apex as well. I think that their drawdown rules are probably the worst. So, like, their drawdown rules are based on whatever your high watermark is. You get punished for green trades, which I think sucks. So, like, if I made $1,000 on a trade and then pull back to like $500, then you lose $500 worth of drawdown. Not really. I don't see the value in trading a Top Step live account. I would just rather just trade my own account and then have the tax advantages of being able to trade futures. Um, the like the perk, right, of trading with a Top Step is it's a risk management difference, right? So worst case scenario, um, like if I lose a trade, okay, I lose my evaluation fee and like a little bit of time, right, which is fine, right? That has a significant upside to what it would actually cost me if I was trading my personal trading. So outlier volume is anything above that white line, right? That white line is the volume moving average. So I need it to be above average volume. Um, so yeah, like from trading a express sim funded account, I can get a tremendous amount of upside with pretty much zero downside liability relative to what I would have if I'm trading a personal account, right? Or if I'm trading a live funded account. So I lose that leverage if I go live funded. I get worse fills. I don't get the tax advantages, and I get only 90% of what I generate. So there's very few advantages of that to me. In general, I think that the perk of working or taking payouts with a prop firm is to basically generate your first maybe 50K account with it, right? Maybe more, and just get away from being a slave to their structures. Um, so yeah, there's limited value in that. So I've got no issues with direct sim funded accounts. They're fine. But yeah, like someone is saying there, right? Those companies you can they make money on the front end, right? Which is the evaluation cost. And so, in generally, what you see, right, with those companies is they apply more like restrictions on how you can take payouts. So they'll apply consistency rules. They'll punish you for making big money. They'll do those sort of things, and so that fundamentally sucks, in my opinion, right? Um, and yeah, something I wouldn't really like. I haven't personally traded with top one futures. That's something that I'll probably try once I've made my move here. But yeah, because their consistency rules seem relatively chill, and they don't have any restrictions on how much you can pay out. But yeah, well, I mean, it looks promising. They've only been around for like a month, so well, let's see. There's so many of these companies popping up, and I think there's probably more companies that are popping up than there are good operators running these companies. And I think that you'll probably get a few of these turn into rug pulls and things along those lines. So let's go back right to why I like TopStep. They may be not reputable. I don't think any of these companies are necessarily, but they've been around for a long time. They've got a huge foundation, huge base, and I've never seen them, um, really do anything screwy when it comes to taking your money out. These new companies, you just don't have the same evidence to get to those same conclusions. Like I don't see the value of being a guinea pig for them, pretty much. Oh, still just waiting. Excuse me. No coffee here today. It's a sad day. Okay, maybe I could do N or ES here. Maybe on this 10 min could work. It's really the only thing I have. Everything else is not really close. So from profit target to stop loss, and let's see how this thing behaves here. So you're looking at a stop loss of 194.25, and we're looking for it to break down under our confirmation candle low, which is that bar, right? And then find support here off of that blue line. So I'd be risking about 2 points, so about $100 a contract, right? So this could be a 5 contract play. And again, right, this is be a short sell here to the downside. And it would only be 5 contracts, right? I can get that blue line or better. Otherwise, I have to size down here to account for that extra risk. So watching here closely, team. Watching here very closely. Stop loss 124.25. Let's see if we can pull back here into my entry zone. Way too fast. Try it again. Okay, point away, watching. Still 7 minutes on this candle. So again, right, no rush. I don't have to chase this. Kind of a general rule of thumb, right? If you feel like it's time to enter, you can usually still get a better entry price than that. Okay, so watching closely still. Way too fast. So no entry, way too fast. Right, we want to see that blue line act as support here for the downside. It hasn't really behaved that way here yet. So again, hands back in the pockets. Let's try this again. And I've yet to place an entry here, right? No trade taken yet. Just watching the strength of this pullback or how aggressively it moves. And okay, no entry, right? So avoided what would have been a losing trade. Now we could still potentially set this thing back up, but it's going to require a much different position sizing here now. And it's not really behaving as if it's any level of bearish enthusiasm. So, okay, good process there. Didn't take the trade. That failed right on the pullback into my entry zone. It didn't behave like stairs up. It behaved like an elevator up, right? As if it was absorbing all the enthusiasm that was at that price. And that for me, right, is the opposite of what support is. So best case scenario, I would have been faked out, right? Worst case scenario, my thesis is wrong. Neither one of those as a best case, worst case, right, is something that it's very appealing. Okay, right? Maybe didn't place didn't place a trade there, right? Or wasn't able to get an execution, but I made a very good decision to avoid chasing a compromised play, right? Maybe you didn't make money, but I saved money. And trading is very much a game where a penny saved is a penny earned. So, okay, saved my penny, got to relive the old glory days. So, no complaints. I got one more story for you guys here. This is a good one, but so like people, I get asked all the time, like, how did you get your hedge fund job? You want to see elevator down, stairs up, right? Elevator down, stairs up. So as it's pulling back right into your price, it should be happening slowly, as if it's like grinding its teeth to get there. The moves that we would see, right, or we saw in both directions were just like rapid little flushes, right? It would fly back up to that 192.50 and then get stuck. right? So it wasn't pulling back into that price slowly. It was pulling back quickly and aggressively as if it was eating up all the volume or all the orders that were hanging out at that price. I think I did say a couple times, right, that it behaved too quickly or it moved too quickly, which for me, right, means that I'm seeing the elevator up instead of the stairs up. So, in my opinion, probably shouldn't have been an entry. Or at least had I taken one, maybe I would have had the thesis correct, but I would have been faked out before it ever got there. See, I get asked all the time, how'd you get your hedge fund job? I want a job that pays me that. Oh, I want to do this. I want to do that. The way I got it, or whatever you want to do it, I emailed hundreds of companies, right? No, don't blame the YouTube delay, Samuel. I will refuse to accept that as an excuse. That is absolute and total bullshit. That is not it. So I refuse to accept that as your excuse. But yeah, so when I was interviewing there, I actually thought my interviews were going really poorly. I didn't think that they were going well at all. I thought that I certainly wasn't going to get the job. And I remember uh, maybe it was the third last interview that I had to do because you had to interview with everyone on the team. A guy named Steph came in, and Steph was like a portfolio manager there. And what Steph, you saw my resume, took one look at it, and he's like, "Oh, you do photography?" I had like that as one of my hobbies on my resume. And he asked me what type of photography I do, and I told him like I like traveling and shooting people. That was like verbatim what I said. And he looked at me, and this was maybe 2 weeks after there was like the terrorist attack in the Stade de France, where ISIS blew up a bunch of people going to a soccer game. And he's like, "Oh, fucking hell, mate! Like I saw you on the news. Like, was that you?" That's what he did. Like that's what he said. And I ended up just like rolling with the joke. And I was like, "Yeah, yeah, don't tell anyone. I'm only here because I don't want Interpol to find me. All this kind of stuff." And so that's why I got the job. Um, I literally just like was sick enough. I had a sick enough sense of humor to fit in with the guys on the desk, and that's all it was. But no, guys, the latency on YouTube is never going to be the difference. I cannot stand that as an excuse. It drives me freaking insane. Don't blame YouTube. Look internally. Never give something else power over your decisions. It's such a slippery slope. And it honestly drives me nuts. Absolutely insane. Like if I got an email working institutionally and my excuse to say that I didn't get an execution was that, email came in when price was already above the price, I would have been fired instantly. They just told me to fuck off. So I promise you, it's never that. I've been trading now, Hayden, for almost 13 years. It'll be like 13 years come September. And the person who I am now versus who I was when I started is very, very different. And I've had to earn each of these, I'm gonna call them stripes, from just basically surviving, right? Horrific and catastrophic mistakes. And then realizing, right, that trading is the ultimate self improvement game, right? It's self improvement gamified. So the market always reminds me of what my biggest insecurity is or what I'm absolutely just worst at. And if you want to get better, you take that feedback and you improve. If you want to stay stagnant or you want to give up, then you ignore those lessons and you pretend that they aren't an issue. So for me, right, I I love trading. It's my favorite thing I've ever done. I fell in love with it from the second I saw a trading desk. So the only way to play this game long term is to learn from my mistakes and just focus on getting better and better and better. Not always fun, not always pretty. I make mistakes all the time. I'm human. I'm an idiot, but I'm never going to get trapped by one or yeah, resign myself to my fate when I make a mistake. It's not the reality. Any questions here, team? I don't really see myself getting much of an edge here. The only trade I would have been able to take would have faked me out, and it didn't quite meet my pullback requirements. So I'm not yeah, super motivated to keep watching the market if it's not giving me an opportunity. I think the big difference between working for myself and trading retail versus trading for a fund is when I'm working for myself, I get to optimize for freedom. When I was working for a fund, I had to be forced to optimize for P&L. And I say that working or optimizing for freedom is a lot better than chasing just some random number. So yeah, I don't think I have an edge here today. I'm not going to do anything else. So happy to answer any kind of last questions, but not going to place any trades. So any questions here, team? Yeah, so I stream generally from about 9 a.m. to about 11, maybe 11:30 if I have a volatile, like a highly volatile market. So just generally, Mark, right? I trade momentum concepts. So I need high volume, kind of trending breakout markets, right, for me to be able to have an edge. And so there's a couple statistics that work against me outside of this initial kind of like window, right, if you want to call it that. So uh, the most likely time where a high of day or low of day is made is within like the first 90 minutes or so of each trading session. So it ends up being where something like 65, 70% of the time, the high of day or low of day is made within that sort of first 90 minutes. The next most likely time where one is going to occur is then in the last 90 minutes of the day. So kind of like that power hour time frame. And then everything else in between kind of ends up being like a little bit of a day of chop and stuff like that. So that would be number one, right? And then if I know that price action makes highs or makes lows, right, in the first 90 minutes and last 90 minutes, the vast majority of the time, then I also think that I can trust volume more in those periods, right, than volumes outside of those periods. So it's just understanding that, hey, my edge is a momentum one. You have the most amount of momentum early, and yeah, if it's not there, it's not there. Now, if I had action, cool, yeah, I'm happy to trade as long as I still have a good amount of momentum, or at least like a reasonable range that I could target. But I don't have that here today. It's kind of like a grind lower instead of giving me a very smooth bit of price action. And so I'm not going to force anything here. So any other questions here, team? Any other questions? Congratulations for those who did make money. But hey, I'm in my second most profitable position here today. I can't complain about that. So final call for questions here, team. Final call for questions. So if there's no one who's willing to buy or sell, or there's less market participants, right? Then if one big order comes in, it can just tilt the order book right in one direction or the other. So that's why, right? You can get such big movements without much volume. It's because there's a lack of participants, and so the order book isn't very competitive. When the order book isn't very competitive, it's very easy to skew those like yeah, supply and demand type conversations. Congratulations, Mark. Anything else here, team? Anything else? All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always. Right? If you have any questions, hit me up outside of market hours. and I'll do my best to get back to you as soon as I can. Otherwise, looking forward to catching up with a few of you here in our one-on-one calls later this afternoon. And yeah, we'll jump back on tomorrow, hopefully for what should be a busier trading day, but who knows? And then, yeah, we'll finish off the week here with a bang. Again, right? Feels good to control that dopamine, be deliberate, be specific, avoid obvious mistakes, and hopefully you all learned something here today, even if maybe you didn't make any money. So appreciate you all kind of tuning in. Be back at it again here tomorrow, starting at 9 a.m. Eastern, and I'll talk to you then. Peace.